All right, we're back with you as we watch your ag commodity market activity. I'm Marlin Bohling with you. Let's go ahead and see what the markets are doing, and then we'll get some commentary in a second. Let's start with this corn market right now. See where it is. It is down about 1 3/4 on the May. We're at 371.5, and we have December new crop down a half at 395.5 right now, kind of in the middle of that trading range. And if we look at the soybean market, here in the early going, we have the May contract still down 4 3/4 at 904.5. That is a penny off of its low of the day so far, but it's about 7 cents off our overnight high. And November now trading 4 lower. We're at 938.5. And if we look at that wheat market, well, in Chicago, we have the May contract down 4 1/4 at 458. In Kansas City, we have the May contract trading at 438.5. So it's down 4.5 cents. A lot of pressure in Chicago and Kansas City. However, you look at Minneapolis wheat, and that's a different story. May now a penny and a quarter higher at 556. But even that is well off its earlier high by nearly a dime now from its early morning hour trade in the Globex market. I want to welcome to the program Mr. Chris Swift of Swift Trading Incorporated in Nashville. You're looking very dapper today.
Thank you, sir. Appreciate that.
You're getting ready for spring.
I didn't have to float the canoe down here this morning.
Exactly, exactly. It is a little different, isn't it?
It is.
There's this big shiny object in the sky today.
It is. Blinding almost.
I have to get used to that. All right, talk to me about the grain market. Where are we in the overall scheme of things here in the grains?
Under a lot of water right now.
Yeah.
Nebraska under a lot of water. Iowa still very wet. Going to be no early plantings in those areas for a while. Down south, we finally got a little breath of springtime down here, so I think that we'll be able to start doing some field work a little bit later on this week, actually, go down a little bit further south. But in the world and grain markets moving around, there's not a whole lot that went on over the weekend that I saw, and no real big movements one way or the other that would suggest a booming move one way or the other.
I'm just curious, have you had a chance to check, are there any analog years kind of comparable to this where we had a really wet early spring like that?
You know, we talked about that a little bit out there, and I heard you mention that. But I'll do some work on that. I'll see if I can't find something out this afternoon and see if there's any kind of patterns that we can look back on and see where, we had this kind of moisture this late in the spring.
So we have so many unknowns with the Chinese trade negotiations and the production. We don't even know what the acreage is going to be. And then we've had all the delayed USDA data. We will actually get prospective plantings, I guess, into this month.
28th,
right?
I think, yes.
Yeah, right. The last trading day of March. Is that going to carry more weight than normal, do you think, or less?
I don't know, because there's lots of discussion about whether bean acres will be shy and they'll plant more corn acres. We see that input costs for corn are still very elevated, and now we can't get out a good fertilizer right now, which is what a lot of places we do is throwing out fertilizer right now. So I'm not real sure what they're, I think even USDA, whatever they come out with, could be skewed greatly, not by misrepresentation or anything, but just the changing weather patterns could change a great deal, or the tariffs. There could be an issue out there where the tariffs get resolved, and we say, you know what, we're going to go to a heavier bean acre than corn.
But I'm just curious, when do they get their information for that prospective plantings report? When do they do that survey?
They have been there. I think it's 2 weeks prior to the to the announcement of it. I think. I don't think it goes on all year.
So
I'm pretty sure
be doing it right now.
Yeah, it's a database. It's a database
right.
that they go through every year, and that way the farmers can't skew it too awful much. They can say after 5 years you've only grown 1,000 acres, and now you're kind of 2,000 acres. There'll be some questions about that.
Interesting. So I just wondered how much is subject to change because of
right. Probably not a great deal just right off the bat.
Okay, I want to talk with you in a minute. We'll come back here, and I want to talk about the big turnaround that we had in the livestock trade. We opened up higher and everything, and that lasted, a minute or two and reversed out. We'll cover that when we come back. We are talking with Chris Swift of Swift Trading Incorporated in Nashville, and he's here in the studio with us to talk about the markets. I want to switch gears here and talk about livestock.
Okay.
And you literally walked into the site a little bit ago, and we were talking about how the livestock trade, all the contracts opened higher,
right.
Took a nosedive and went lower.
Right.
Let's look where we are now.
This
ought to be fun. Okay, here we go. Live cattle. Well, we have April down 25 at 128.85, but June has now reversed for the second time, and now it's 8 higher at 122. We have August up 1 tick at 117.75, so it's straddling the fence right now. On the feeder cattle market, Well, we have the March down 7 at 141.25, April down 95 at 145.97. So it is still on the minus side, but it is hovering around the lows here right now. May down 90 at 147.50. What about lean hogs? What's going on with lean hogs? Well, Chris, you tell me. April 98 higher now again at 69.78. That's getting fairly close to its high of the day. We had a high of 70.22 right after the open. And then a low a little bit ago was 67.53. Now we're at 69.78. This one will take your head off today. May now 22 higher at 78.13. It's kind of caught in the middle here. June now down 33. So all over the board, but man, that's hard to keep up with this market.
Big fluctuations, and it's going to keep getting bigger.
Expanded limits today, right?
Yes, we do, as well as a tremendous basis spread. So it's a cash-settled contract. Hog index trading in the low 50s, comparison to the low 90s for the August contract and mid-80s for the June-July.
So they're narrowing up the spread today.
Well, a little bit, but not by much. But it had narrowed back considerably the first of last week. It got down to what somebody might call normal, and then spread right back out again with the futures rallying over $10 last week, and the index, I think, maybe up 2 to 3 for the whole week.
So what do you think? Is the Trinity funds now of the mindset that, well, we had big sales to China last week, they must be back? I think probably so, because we've talked about this for a long time about China coming in and going to need U.S. pork, and it seemed like they took forever to do it, but now that they finally did it, it's finally come out and said this is probably going to be a long-term situation, and we're already looking at some summits being held the end of this month and first of next month on this situation, so it's getting very interesting. And you're actually going to attend one,
I am, April the 11th.
In Kansas City?
Kansas City, Kansas. Okay. It's held by a couple of peers of mine that I think will bring some real good information to it.
And you were talking about long-term impacts. What about the long-term impacts of this bomb cyclone we've been talking about? And you mentioned Australia.
Yeah. Right now, we're not going to be gaining any weight. None of the cattle are going to be any kind of condition up north to put on any additional pounds. So whatever they've got on them right now is just going to be able to keep them on there. Probably more sickness will come into it. We've mentioned the mud. The mud will be very difficult for them to get through. But Australia is still in a drought, and Australia is now down to where their packing capacity is overstretching what their production level is. So if they ever do go back into any kind of expansion, it will make them worse for the next 6 to 12 months before they'll have any increased inventory. So they're going through very similarly what we did in the 12-13 time frame here in the U.S., and we know what that did for U.S. beef prices, so that's doing a very similar instance in Australia.
Well, thanks for the information.
Absolutely.
A lot of stuff. Covered a lot of ground. Thank you, Chris.
Yes, sir.
Chris Swift of Swift Trading Incorporated.
All right, gentlemen, as always, thank you very much.